Hi, I'm Steve Dudash, IHT Wealth Management. Welcome to this Wealthcast. Hey, look, we're back in the office, which is good. And the trains are busy. Coming down here all the last couple months, it has gone from where I was the only person on the train to it's packed, which is great. It's good to see. So, want to talk about, we do, and we've talked about this before, but we have quarterly reviews of our portfolios where we fly in some of the top managers in the country, like Fidelity and BlackRock, come into our office and we sit down and we talk, and we actually meet in person again, and we talk about different parts of the economy, parts of the market, and get their perspective from all these big institutions. And we're lucky because of our size. We can have some of these really high-end people come in, and we kind of compare and contrast each different firm's opinions on things. And so this quarter we were talking about bonds, which, yeah, I know it's not that exciting, but it's good. And I wanted to give a little background on what the consolidated opinions are, and then what that means to you guys. The biggies are, one, bonds aren't going to make you any money. I've been saying this for people for a long time now. Let's be on the same page. The more bonds you have in your portfolio, the lower your returns. They're based on interest rates. Interest rates are ultra low. You maybe make 2.5%, 3 maybe in the next 5 years per year. Not good. But the flip side is you can't put all your money in the stocks unless you're aggressive. So just be aware that that is going to drag your returns down. Everyone across the board kind of said the same thing on that. The other piece is inflation. Everyone's talking about it right now. And yes, we know, I did a video on this a few weeks ago. Inflation's bad right now. This is transitory, which is the cool little saying that every single person seems to want to say these days. Transitory means it's going to be short-lived. And frankly, we're already seeing prices come down. Like for one piece, like I talked about a few months ago, lumber went from $300 a bundle to $1,500 a bundle, went through the roof. It's down 40-something% in the last month. It's come way down. Copper's come way down. China just basically announced they're releasing tons of commodity reserves that they've been hoarding. That'll flood the market. So don't get overwhelmed on the inflation side. Again, something that a lot of people were saying to us. And the other piece that I found very interesting that I'd been saying, and a few of the other managers said the same thing, and that is deflation. Just wait till this fall, maybe winter. They're going to start talking about deflation again. And they're going to say how prices have starting to come down so much because production's getting back and ramping up, and people are going back to work. And the service industry, which is 2/3 of our economy, are going back. And so that's going to start unwinding some of those fixed costs that a lot of people have been seeing across the board in different aspects. So where I'm going with this is, bonds aren't going to make any money, but if you want to be safe, you need a piece. Inflation's overblown. Do not freak out about it. Don't go and buy a bunch of tips. I think I said this before, or anything that is inflation protection type things. Everyone agrees on this one. That it's already priced in. If you buy in it now, you have to believe that it's going to go that much more than what is expected, which it's not. So avoid that trade. That's a rookie move. Don't do that. Accept what bond returns are going to be. And not to get too deep, but we're still overweighting the U.S. market because, frankly, the bond world's just better in the U.S. right now than it is in most international markets, unless you want to do Asian, and that's just a little bit outside the scope of what most people want to do. So, hope this helps. Call me. This one, I can go on for another half hour, but call me on this if you want to talk a little bit more about bonds in particular and some of the aspects of what these different managers were looking at. So hope this helps. Have a nice weekend, and we'll talk next week. Bye.